I've already mentioned that I do the bulk of my investing at the end of every quarter. And last week I talked about my investments into my index funds with Vanguard, but today I want to put some money into my dividend paying stocks with eTrade. Today I want to focus on three things. The first thing I want to talk about are three different characteristics that I look at before adding a company to this dividend paying portfolio with eTrade. There's a lot of factors I look at when considering a new company to invest in, but there's three that I want to cover and give some more information on today. The second thing I want to cover is I want to actually show you in dollars how I'm invested in these companies with eTrade. Finally, I want to invest $1,000 today and show you what the decision-making process is for me when I'm looking to invest money on a regular basis. As you know, I'm not a financial advisor, so I'm not telling you that you have to invest in these companies, nor am I telling you that you have to invest at a certain price or the price that I'm investing in. I just want to share with you how I invest my money to encourage you to look at investing for yourself. The only thing that I will tell you that you do have to do is subscribe to my channel. Oh, hello there. Hi, you want to join? Do you have something to say? Yeah, Tinsley has lots she wants to add to this topic. So please subscribe to my channel and like this video so that YouTube realizes I'm worth listening to and they'll share my video with others. In addition to Vanguard and eTrade, I also have a Robinhood account. So I might do a series on that at a later time, but today we're just focusing on my eTrade account. I want to have no more than 20 in this eTrade portfolio, and even that might be pushing it a little bit. This makes it a lot easier too. I only have to focus on a maximum of 20 companies and their performance, so I know when to invest my money. Before I get started with the three numbers that I look at when picking a new company to invest in, I want to give one major tip. Now, a lot of people will tell you to invest in things that you love, products and services that you love, because you're a consumer, right? So might as well invest in the company. And this is not always the best advice. It could be a great place to start if you want to pick a company you like and research it to see if it's worth investing in, but do not just blindly jump into investing in a company simply because you like their product or service. A great example of this for me is Uber. I am an enthusiastic customer of theirs. I think ride sharing is innovative and brilliant, and I'm a big fan. However, I don't want to be an investor in Uber. When you look at their financials, you see that they had an operating loss of $8.5 million in 2019. They're also at the center of a lot of regulatory issues with how they pay their drivers and also if they can operate at airports and be direct competitors of taxi cabs. So although I will spend my money on them to get from point A to point B, I don't think that I want to invest in this company. There's too much risk for me. There's a lot of factors I look at, such as news articles and financial statements, in order to decide if I want to start investing in a company. But just so it's not so overwhelming, I'm going to focus on three things. So the first, I said that you don't want to necessarily jump into a company just because you like their product or service. A great thing to look at is their dividend history. So this number I look at is how many years they have consecutively paid their dividends to their investors and their dividend growth rate. So how many years they've consecutively increased their payments. Now there's an easy way to do this. If you go to Google and you search dividend aristocrats, you are going to see a list of companies that have consecutively paid their investors increasing dividends for the past 25 years. If you think about everything that our economy has gone through in the past 25 years, it's even more impressive to know these companies have continued to pay their investors at an increasing rate. If you want to take it one step further, then search Dividend Kings. It's the same concept, but these companies have paid their investors increasing dividends consecutively for the past 50 years. The next thing that I would like to see is a PE ratio lower than 20. What is a PE ratio? It is a company's share price compared to their earnings per share. The reason I want to focus on less than 20 for a PE ratio is because the higher it goes, it could be an indication that the stock is overvalued. And that's very important. So we are looking at what the stock market says it's worth versus what they're actually earning. I highly recommend you do more research on the PE ratio as well. It's not so cut and dry that if you always stick to under 20%, you're going to make a profit. It's just one indicator, and you just want to know what else is going on within that company. The third number that I look at is the dividend yield, and I like to see this above 4%. Higher than 4% makes me really excited, but it's actually not a deal breaker one way or the other. Some of the companies I own are lower than 4%, and that's okay. The dividend yield is reported as a percentage, and it is the dollar amount that the company is going to pay in dividends for owning shares of their company, divided by the current stock price. So as you can imagine, this dividend yield fluctuates as the stock price changes throughout the day. I said that a dividend yield over 4% gets my attention and makes me really excited. But of course, it's not that easy, and it's not so cut and dry. A higher dividend yield could be an indicator that the stock price is falling. And that could be a good or bad thing. On one hand, it could mean that you could get a really good value, but on the other hand, it could be an indicator something is wrong with the company, and that's why the stock price is decreasing. So again, this is something that I look at, but then I want to know more to understand the whys behind the number. With all three of these factors, the number of years that they've paid consistent and increasing dividends, the PE ratio, and the dividend yield, they're great indicators and help you look at more information within the company. Again, it's not quite a blueprint that you can always say, if this, then that, but it is something to get you started. And I have looked at all three of these factors for every single one of these stocks in my eTrade portfolio. Now let's get started on the fun stuff and seeing what I own in my eTrade portfolio. I'm going to share my screen and actually show you the dollars. So I'm gonna start the recording right now. Here it is. This is my portfolio. And again, it's gonna be kind of weird sharing this, so how I edit this might be kind of pieced together. I'm gonna try really hard not to show any personal information like my account numbers, so forgive me in advance, but here we are. These are all the companies that I own in this portfolio. A couple things I wanna highlight. Overall, my total gain, I am down 5.76%. Now, I started this portfolio in February, so everything was a little bit higher, and then coronavirus hit and everything tanked. Now, as we're kind of adjusting to this situation, I guess, some things are coming up, some are stronger than ever, some are still kind of struggling, but it's a process, so I'm not too worried about this. I'm not too worried about this negative $508. Simply because I only lock in that loss if I were to sell everything right now. A lot of these companies are still paying dividends through these times, so I'm still getting those deposits. I'm able to buy more shares, and a bonus, I am buying more shares when they're lower, so that's okay with me. But you can see overall where I'm at with my account. I also have about $5,262 in cash to buy more stock with. I'm gonna try to only spend $1,000 today because, well, that's my budget. I wanna keep some of the cash in there because I think that we may still see some more fluctuations with coronavirus. We're seeing some today already, so I wanna keep some cash on hand. One view I like to see is what my biggest positions are. So if I sort by value, I can see the bulk of my money is with JP Chase, Disney, and Johnson & Johnson. We can see my smallest positions are with ExxonMobil, AbbVie, and AT&T. I wish these were two of my larger positions since I bought at a fantastic price, and so I have the largest total gain here, but what can you do? I also like to see the last reported price right here compared to the average price that I paid. So that's pretty awesome. If you look in this arrow here, let's look at JP Chase, we can see all of my different purchases since I first started in February and the price that I paid. So here, this is what's kind of dragging me down. When I first bought JP Chase, I bought it at $137, and it's currently at 94.95, roughly, if we round. One thing I do want to mention is that we are in an active trading time right now, so some of these numbers may change. I'm on my lunch break at work. That's why there's no wine or White Claw or champagne today. So some of these numbers may change as we're going through it. Another way I like to sort this is by total gain. And I'm gonna use this when determining what I wanna buy today. So I see that AbbVie, Exxon, and Disney, I have total gains for my position. So this isn't for the day, right? We see the change over here for the day, but this is overall my position. So I've done pretty well with these. On the other end, we see the total losses. So my positions that have lost the most money, and that is Wells Fargo, Chase, and International Paper. So what I know is that when these prices have dipped, that would be a great time to buy more. We want to buy lower so that we can get that higher dividend yield. I've already looked at these companies. I feel confident in them. So I know that these are ones I want to invest in. It's just the right time for when I want to buy them, right? So that's what I'm looking at. I don't know if I'm going to buy International Paper today just because I'm still considering if that's a position I want to maintain or if I want to get out of it and sell when the price goes up. So I may not focus on that one today. But this is another view that I really like, and I'm going to take this into consideration when choosing my stocks today to purchase. The first stock that I want to buy today is Disney. So let's go ahead and do that right now, right? So I have it sorted out, even though it's kind of higher on my total gain. This could be an indicator that I'm buying high. I've been watching it today and it's dipped a little bit, and so it's a good time to buy. My average price paid is $109. It's at $111.93. So I'm gonna go over here. I'm going to hit buy. It takes me to this next screen, and there's some great information on here I want to show you. So there's a snapshot of the performance. If we look at it over 1 year, we can see where we're at right now. When I first bought Disney, it was around right here, right before they introduced their Disney Plus streaming service. So I made a good amount of money there. Of course, it's unrealized because I didn't sell, I held on to it. But it did have a jump there. But now I'm in a lower position than when I even entered, which was on my Robinhood portfolio. That's okay, I've researched Disney, I feel confident in them. There's also this tab, which is the positions, and you can see that I currently have 9 shares, the average price I paid, and the total gain. So I know, I ran some numbers earlier, of course the price changed since then, so I may be under or over my $1,000 mark, but that's okay. Here's the options for the actions. I want to buy 2 shares. I'm gonna do the market price right now, good for a day. All right, so this is the summary of the order right here. That looks correct, $223. All right, so next I wanna focus on the lower ones on my list. So I have been looking at AT&T. This is something that I want to increase my position in. So if we click this little I next to the ticker symbol, we'll see some more information on it. There is the PE ratio I was talking about earlier, 15.39. We see the dividend yield, 6.88%. So those are 2 numbers. And then the dividend history, I've already looked at previously. Solid company, I'm pretty excited about it. So I know that I want to trade, I want to buy. Here we can see the performance. I should mention that today is June 24th. Depending on when you're watching this video, that could make a difference on all the prices. I'm gonna buy 4 shares, market price, good. Truth be told, I really want to buy more of JP Morgan Chase right now. We can see that it is lower on my list, meaning that the total gain, it's actually a loss. So I'd really like to add more of that, but I also said that this is one of my largest positions, so I want to diversify a little bit and put money somewhere else. So I'm going to buy some Wells Fargo right now. Now, looking at their performance, they have been hit hard with the coronavirus and they still have not recovered. A lot of the banks have not, but financial institutions are a large segment of my portfolio. I understand the businesses and I feel comfortable increasing my position right now. So this is going to be the largest purchase in terms of number of shares that I am buying today. $392. And now I have more Wells Fargo. So hopefully I'm buying it at a lower price than what I originally bought it at. So that will make that ultimate loss number look a lot better. This last one is gonna be a little bit of a curveball because I don't currently have it in this portfolio, although I do have it in my Robinhood portfolio. I just want to increase the position, so I'm going to do it here. And that is Coca Cola. So this is one that I really like. I've done a ton of research on it. I'm really excited about it. It's just hard to find a good entry point to buy more, but if you look at the year performance, you can see the huge Corona dip and then where we're at right now. So I feel fine putting in more money with this right now. Again, you can look at some of the numbers. This ex-dividend date is an important one. You can see I just missed it since this says June 12th. Today is June 24th. What this means is that I have to buy the shares of Coca Cola by June 12th, 2020 in order to get the dividends on July 1st. So you can't just buy a company, buy their stocks the day before they pay their dividends and then sell it right afterwards. It doesn't work that way. There's a little bit of lag time. So I'm gonna go ahead and buy. All right, so I know that I want to buy about 6 shares of Coca Cola. Market. I think the market just about closed. The market has just closed for the day, so that last purchase of Coca-Cola will go through tomorrow when the market's open. Cross our fingers that nothing crazy happens. Or maybe something kind of crazy, but something that makes the price go down even more, right? Since I did market value tomorrow morning, it'd be nice to buy it for a lower price. But that also means that my lunch break has come to an end. Like a lot of you, I'm still working from home because coronavirus is running rampant. I live in Arizona, so we are hit very hard. I hope everyone is staying safe. I hope everyone is wearing their masks and staying well. Thanks so much for watching. Don't forget to subscribe, like, and comment down below because I need your support. I need it to stay sane. YouTube wants to see that I'm worth listening to so they can put my videos in suggested videos for other people. So your support really helps me out and I appreciate every single one of you. Stay safe, stay sane, have champagne sense. Bye guys.